Let's now welcome board Shenu Agarwal, the MD and CEO at Ashok Leyland, joining in to talk about their numbers. Shenu, good to have you on the show. The CV industry has been in a down cycle. Do you believe that we are now closer to perhaps bottoming out? What kind of growth trajectory are you working with?
Yeah, let me talk about the MHCV industry first. If you look at quarter 1, despite all the pessimism around the union elections, etc., the industry grew by actually 5 to 6%. But quarter 2 was a major dampener where the MHCV industry degrew by 14%. However, in quarter 3, now the industry degrowth is only about 3 to 4%. So I think it is a major comeback now from quarter 2 to quarter 3. And also quarter 4, January is also already behind us. And we have seen the MHCV industry growing by about 4 to 5% in January. I think February and March are also looking brighter and better. And therefore, we are expecting a positive growth in quarter 4. So I would agree with you that the worst is behind us. And, if the positive momentum of Q4 flows into Q1 and Q2, we do hope that even FY26 would be a good year.
So in Q3, Ashok Leyland delivered industry-leading margins. Given Q4 is typically a strong quarter for you, can we expect margins to move towards mid-teens?
Mid-teen margin is definitely a medium-term goal for us. I mean, of course, Q3 has been very good. Last year Q3 we were at 12%, and now we are at 12.8% of EBITDA margin. So that's a healthy growth, but we do want to continue with this kind of a growth in our EBITDA margins. So even Q4, we hope that will be good because the volumes are looking better. The industry is looking better. On the cost side, we don't see any pressures coming in Q4. So we do hope that this momentum on the margins will also continue, especially as we are deeply looking at our cost structures, our material cost, indirect material, and every kind of cost. We have had a fairly good run at cost savings in the last 3 years, but I do believe that we have more potential there.
Right. Shenu, you've previously stated that Switch India will become EBITDA positive this year. Are you still confident of achieving this target?
Listen, Switch India is actually doing very, very well. I mean, not just the volumes or the profitability part of it, but also the way they are focusing on developing new products, right? So we are very confident about Switch India's prospects going into future. As far as the margins are concerned, we do hope that within the next 2 to 3 quarters, they should become EBITDA positive.
Fair enough. Now, you'd also previously indicated plans for value unlocking through listing of subsidiaries. Could you provide more update on that? Which subsidiary are you looking at prioritizing, where you are looking at listing it, and what could be the timeline?
Yeah, I think the first one that is up for listing would be HLF. The plans have been slightly delayed because of various regulatory approvals, which are taking time. But we still are hopeful that in Q1 of next year, Q1 FY26, HLF should go for listing. The next would be our electric subsidiary called Switch, but there the time frame could be 2 to 3 years from now.
Right. And how much capital are you planning to invest in Switch Mobility? And will the allocation be balanced between India and the UK subsidiary?
Oh, we have already, the board of directors have approved an induction of 500 crores into Optare, which is the holding company for Switch, right? That is basically for 2 things. One is that, some of it will be required for CapEx, and the other would be required to repay some debt, right? So I think in future, like I said, India at least will not require much of a capital as it starts becoming EBITDA positive and then cash positive. But Switch UK may require some more capital going into next year.
Okay, Mr. Agarwal, good to have you on the show and be speaking with us. Good speaking with you.